Hi, Norman Hallett here with your next 4-minute drill for traders. Okay, raise your hand if you feel like a mouse on a spinning wheel when you're doing your short-term trading. Running around, trading and trading again, round and round, and getting no place fast. Raise your hand. Let me see. Okay, great. There's a hand. Thanks for being honest. Oh, another one? Hey, excellent. It's a good thing. It's a good thing to admit your current state of affairs. So, question is, what do we do about it? How do we spend less emotional energy and at the same time make more profit? I believe the answer is simple, and it starts with the notion of trading longer time frames. I can already hear some of you saying, well, if I trade a longer time frame, I'm going to have bigger losses when I lose in a trade, and my account is too small to withstand 4 or 5 losses in a row like that, which really can happen with even a great system. Great systems are even capable of 4 or 5 losses in a row. So what do I do? Well, my response is find the largest time frame that allows you to keep your individual trade risk to under 3% of your total account and go with that time frame. Now, because I travel a lot, a few years ago I started to trade from daily charts, which means each bar represents a full day of trading. I quickly experienced that I was making less trades, of course, and having more profitable overall results. And I didn't have to be on top of the market every moment of every day. I was more relaxed, and my account was advancing nicely. Now, another thing I did to reduce my risk was to figure out what was the fewest number of positions I could be in to execute my trading plan correctly. And I trade the minimum number of positions. Now, combine that with choosing markets to trade that are smaller in size, and I wound up having a lot of choices. I primarily trade the futures markets, so I found myself trading corn instead of soybeans. Corn is a smaller market. Cocoa instead of coffee, etc. I chose the smaller markets. Also, look at volatility. The less volatility you have in your trading, the more you can control the risk. The chart is just more manageable. If you trade currencies, find a pair that's been less volatile and trade that pair. And I know a few of you may be saying, well, giving up volatility means giving up big profit potential. And that's true, but to that I say building a trading plan, the right one for you at whatever time in your trading life, it really involves compromise. If you've been running on that mouse wheel and you need something different, I'm giving you an alternative here. Be a little more like the turtle and a little less like the hare. Okay, if you trade stocks, how about looking for lower price stocks to limit your potential risk? Again, if you can find a way to trade longer time frames, that means there's more time to let a trade develop and more time for you to relax and pat yourself on the back for running your trading plan in a disciplined and effective way for you. Now, I'm even looking now at trading from a weekly chart. And if the particular account I'm thinking about right now grows a little more, I could even trade monthly charts. So, in summary, to slow things down and replace spinning your wheels with getting good trading results, here's what you try. Finding a longer term time frame to trade, finding markets with lower volatility, find lower price stocks if you trade stocks, find markets that are smaller in size if you trade futures, and reduce the number of positions you trade to the minimum number needed to trade your system effectively. The results will be less emotion and more discipline, and that will result in more profits. Try it. I think you're really going to like it. Okay, that's it for this edition of 4-minute drill for traders. 4-minute drill for traders. So until next week, stay disciplined.